Okay, we are live. Thank you so much, everyone, for joining. Well, welcome, everyone, to the 5th SDG Cities Community Learning Series called Social Finance, Why It Matters for Achieving the SDGs. My name is Margaret, and I'm the SDG Cities Coordinator, and it's my pleasure to welcome everyone to the event. I would like to go through briefly the program for today's event. So before we begin, I would like to give a quick language acknowledgement so that we can get started in a good way. So Guelph is located on the ancestral lands of the Attawandaron people and the treaty lands of the Mississaugas of the Credit First Nations and Anishinaabe, Haudenosaunee, and the Métis. And we're grateful to those who have continued and we're grateful to those who have and continue to steward and protect this land. So today we have 4 fantastic speakers. We're here for about an hour. We have 4 speakers from 3 different organizations making an impact in the social finance sector. And after their presentation, we have a short Q&A session hosted by Emily. So I encourage everyone to post their questions in the live YouTube chat. And now I'm going to go through a quick introduction to the SDG Cities project and go over some housekeeping items. SDG Cities is a collaborative project hosted by 10C Shared Space located in Guelph and the Pillar Nonprofit Network located in London. SDG Cities provides learning opportunities like this one, as well as tools, resources, direct support for those in our community working to advance the Sustainable Development Goals, or SDGs. And we do this by building awareness about the SDGs at the local level. We increase skills and expertise necessary for implementation. We develop and test tools specific to small and medium-sized cities. We also convene networks of organizations to share ideas and strategies for widespread SDG implementation. You can also check out our website for more. We'll put our link in the chat. And yes, there's some housekeeping items on the list here. So this community learning series will be broadcast live on YouTube. And only the presenters are shown on the screen. So you'll be able to access the recording for future using the same link you were sent to join via Eventbrite. And we encourage everyone to post questions in the YouTube comment section. Emily, who is here today, is monitoring and the comment section, and we'll select questions for the Q&A at the end. And without further ado, I'm going to pass the mic to our first speakers from Harvest Impact, and the floor is yours, Jess and Heather.
Thank you.
Great. Thanks, Margaret. Welcome, everyone. I'm Jess from the Harvest Impact team. I'm the Community Investment and Engagement lead on the team.
Hi, and I'm Heather. I am the Enterprise Support Lead with Harvest Impact by 10C. So we'll just jump right in. And if we could have our first slide up, or we can go to the next slide, please. Thank you. Okay, so just want to give a little bit of context. I know a lot of people here may have an understanding of what is social finance, but this will be a really quick slide. And just a little bit as well about 10C, or I beg your pardon, about Harvest Impact. So we are a social impact lender and funder with different financing, social financing opportunities, but we also have an opportunity, which we'll talk about in a few minutes, Jess will, in terms of our bond program. So a way that investors can invest as well. So social finance, it's the practice of making investments intended to create social or environmental impact in addition to those financial returns. And social impact in our definition is the effect on people and communities that happens as a result of an action or an inaction, an activity, a project, program, or policy. And so that is pretty holistic and wide-ranging, and certainly the projects that come to Harvest Impact and the impact they're making hit a lot of those indicators. And social lending, which we are a social lender, is financing with the intention to stimulate a social impact. Okay, if we could go to the next slide. So we are character-based lending. We invest in businesses and projects that advance equity and sustainability. We're a really young lender, and we're moving really fast. We're making loans and we're growing rapidly, which is really exciting to be a part of. And it's also a great indicator of need. Not that the need necessarily has changed, but awareness of social impact financing and investing. So character-based lending, really, I think, Jess, you're going to talk a little bit more about that. So it means that the social impact you make is a primary consideration. We support circular economy entrepreneurs in early and growth stages with access to, again, that social and financial capital. Our loans are between $2,500 to $50,000, and the interest rates vary. They're from between 4% and up to 10%. We support training and resource needs, and really our investments are removing barriers to growth, and by virtue of that, removing barriers to impact. So I think I mentioned that we're new and moving quickly. We've got 15 loans to 14 businesses, and 70% of our businesses are women and gender diverse. So some of the companies who we have pictured here is Winter Hill, and there's a lot of regenerative agriculture that's happening there. We supported, and some of our funding was. I need you to help me.
Oh.
It was the
wool farm, All Sorts Acres.
Yeah, sure.
Yeah.
Okay, I was going to talk about Winter Hill, but yeah, talk about All Sorts Acres. They're great. They have a pelletizer, and so a really innovative and fascinating statistic about sheep wool and how much of it in the Canadian economy gets wasted. And so by diverting that waste, creating really nitrogen-rich pelletizers for fertilizer or pellets with this pelletizer. So we funded them being able to purchase that pelletizer, and then so now they can monetize on that waste. It's a really exciting one. Okay, let's go to our next slide. This is you, Jess.
Yeah. So when we started working on Harvest Impact a number of years ago, we really looked closely at what problems we wanted to solve, and we wanted to look at why social finance was so important. Harvest Impact was the result of a project and some work that came through the Smart Cities Challenge with the City of Guelph and the County of Wellington back in 2019. And the core sort of 7 problems that we wanted to look at was obviously food waste, a big problem in terms of there's a lot of it around and it's being created, and how could we look at that differently. In conjunction with food waste, we looked at access to local nutritious food within a very dominant make, take, dispose linear food system. And we want, like Heather mentioned in the All Sorts example, we wanted to take this linear model and create it to be a more circular food system. We also looked at communities across Ontario facing lots of growing concerns around precarious work, income inequality, and both obviously now more than ever food insecurity. COVID, as we all know, shone a huge light across our food system in terms of access and the fact that it's so interconnected and what that does when certain pieces of that supply chain fall out. We also looked at new and established businesses within Ontario, many of them from barriered communities lacking social capital, but also financial, to take on a project, whether it was a viable food idea, and not having the access to both the dollars to do that, but also the social supports to be able to go ahead and launch something. When we looked at, can we go to the next slide, please? When we looked at how our theory of change would align to SDGs, we looked really closely at the projects we wanted to invest in and how they would be linked to SDGs. We looked at sort of 8 main SDGs and how those linked back to the principles that we wanted Harvest Impact to focus on. Obviously, increasing circular economy awareness, improving decent and increasing decent work, access to food, localized food systems, all those link back to our 8 core SDGs that we've listed here. And when we look overall at our framework and we try to understand, are we making an impact and are we actually going to move the needle on certain aspects of this? We will look at, okay, well, how can we measure our work and how can we really know that what we're doing is working? And so we've embedded 11 circular, what we call tags, so principles and practices that we use in our impact measurement dashboard. And we use those to help let us know if we're achieving our goals in these specific areas, but are we having the intended impact that we want to create? So we measure things like the number of living wage jobs that the loan clients we support can actually have, and are they created for equity deserving community members? Are we measuring the kilograms of food waste? We're measuring the square feet of, say, a community garden. And we check in quarterly with our loan clients to know, are they getting everything they need from us, but are we supporting them with the tools to get and possibly receive more funding from other sources? We try and connect them to other like-minded groups within the circular economy, but also try and share any new learnings that they have. A lot of the work is interconnected, and that's one of the ways that we can support them best. Do you want to take a sec?
Yeah, sure. So we've been talking a lot. If we can go to the next slide, please. Thank you. So we've been talking a lot about like Harvest Impact as social finance and the social finance arm that we are, which is a great transition into what we're talking about now, which is some of you may be interested about your own, either for yourself or for your organization, how your investments could support transforming communities. So we have 2 really great opportunities. We have an existing opportunity through 10C, our community bond. It's available now. We have really high renewal rates, well over 70,000, and there's a bond card there that image lets you know for all of our series based on the investment, what the return rate is, what your interest rate is on that. And what I like about how just we've presented this is that now you have a really great idea if you were to go with your second option, which is Harvest Impact Bond, that you have a good sense of the kind of impact that your dollars would be making and what you would be supporting through our lending arm. And so, in 2021, we at 10C, we reached a really key milestone. It was 5 years since our initial development of 42 Carden Street here in Guelph. And this is a renewal phase on the initial capital raise, including series C, D, E, and F, which you'll see pictured here from our 26 to 2021 bonds. And as stated, our current renewal rates are well over 70%. And this current renewal phase will take place over the next 18 to 24 months. So there is that 30% window. There are a few community bonds becoming available. And we would like, just to confirm, this is existing capital to replace any investor exits that may happen. And so back to number 2, our Harvest Impact Bond. We're building this bond. It's going to be available in the second quarter. And these investments are going to support this sustainable and resilient local food system that we've been sharing with you. And so we invite you, our email is there, or you can visit us. Those are for the 10 Carden bonds, but also to join our newsletter. And maybe we can drop that in the chat for you. And that's it. I think we're moving on to our next presenter. Thanks, everyone. It's a great opportunity to share what we're up to.
Oh, am I going next? I believe it's Filsan who's going next.
Thank you. Thanks, everyone. Pleasure to be here and joining today. My name is Filsan. I'm the program lead of Verge Capital. And start by a question. Oh, are we on the second slide? There we go. Great. Thank you so much, Louise. So I'll start off by asking a question as well. I think that's a good starting point. What is social finance? We know the vocabulary of finance expanded recently, creating some reimagination of how people can interact with finance and do good. So social finance really leverages private capital to address social and environmental challenges. My favorite words to use in describing social finance are disruption and marriage. The disruption taking place in two areas, finance and philanthropy. By really questioning the understood norms of the two. Specifically, can profit and contributing to good coexist? Can a business model that creates a positive impact also produce an economic return? Similar questions can be applied to charities and philanthropy. The positive impact is already there, but can an economic element also be present? And the answers are yes. There can be a viable marriage of the two, and that's really what social finance is. Now, social finance, while not new, has certainly gained popularity in recent times, particularly after the 2008 global financial crisis. Like most things, social finance and its mechanisms have been practiced long before the emergence of the terminology and vocabulary. Tools of social finance have long been used by BIPOC communities around the world and faith-based organizations. Next slide, please. Thank you. Now, against that backdrop, what is Verge Capital's role in social finance? Verge Capital is a social finance program of Pillar Nonprofit Network in collaboration with Libro Credit Union, London Community Foundation, Sisters of St. Joseph, and SVX. Our story really begins in 2013 when a number of individuals and organizations came together to really imagine a different kind of economy in Southwestern Ontario. Verge really is the result of that imagination and collaborative spirit. So Verge is a place-based social finance intermediary that supports the local economies and communities of Southwestern Ontario by providing affordable and flexible loans to start up and establish social enterprises. This includes for-profit businesses, nonprofits, and charities. We prioritize social entrepreneurs from organizations that serve underrepresented communities. Next slide, please. Thank you. And the mechanisms we have to support social enterprises in Southwestern Ontario are currently two funds, the Startup Fund and the Breakthrough Fund. We will be adding a third fund due to launch later this year. And for anybody interested in participating in that, whether from the aspect of an investor or a social enterprise looking for support, our email, my personal contact is listed on the slide, so feel free to contact. So the Startup Fund is designed for early stage social enterprises. The Breakthrough Fund, which is in partnership with SVX, focuses on established social enterprises looking to grow. Our investees, through their collective actions, contribute to the entire range of the SDGs, and Verge's very own operations have a direct connection to a number of SDGs, namely 8, decent work and economic growth, 9, industry innovation and infrastructure, 10, reduce inequalities, and 16, peace, justice, and strong institutions. Next slide, please. Thank you. Verge's investment priorities are aligned with the SDGs. So in our journey in aligning with the SDGs as a place-based social finance fund, we simplified the SDGs in 4 areas of focus. equity and justice, climate action, systemic change, and local impact. And this really is a way for us to merge the international framework that the SDGs are with the local. So just really merging the identity of the two, Verge being a local, a place-based fund, and the SDGs being international. Next slide, please. Thank you. And so I'll wrap up by going back to the central theme of this learning series by posing another question. What role can social finance play in achieving the SDGs? We know working towards achieving the SDGs requires a lot of money. We also know that this money cannot come solely from governments and really requires a collaboration of all sectors. The UN and numerous nation states have for some time focused on engaging the private sector to contribute to the SDGs. We have also seen more recently countries looking to social finance to help meet the financial tasks associated with achieving the SDGs. So I think the answer really is there, and that social finance definitely matters in working towards the SDGs. With social finance exist proven tools and mechanisms already in use, and perhaps more importantly, the mindset shift is not something that needs to happen in comparison to the traditional financial institutions. And that's all for me. Thank you.
Awesome. Thanks, Filsan. That was awesome. I love the work that Verge Capital is doing. So really happy to be on this panel with you. Thank you so much to the organizers and for everyone who's listening. Spirit Mail, I see in the chat there. Hi, back to you and any other friendly people in the chat. Feel free to say hello. We'd love your questions. And I'm going to try to keep things quick on my end. I really want to get to the Q&A just because I find that is sort of the most exciting part of these presentations. That said, happy to kind of give a little bit of an overview in terms of what I do. My company is called Good Investing. So I'm a CFP, a certified financial planner. And what I do is I help people invest their own money in a way that aligns with their values. Now, before I kind of get into the nitty-gritty of how that works, I really want to acknowledge that investing in general comes with a pretty high degree of privilege. There are a lot of people struggling right now, trying to make ends meet. And so those of us who are fortunate enough that we make more than we spend on a month-to-month basis, and we have a little bit of savings left over, or maybe we've inherited some money, really, I think that there is a privilege there, but also a responsibility that when it comes to our investments, most people just don't think about it at all, really kind of head in the sand. They give the money to someone to do it for them, and they just really don't give a lot of intentional thought when it comes to their investments. But my perspective is that money is power, that when we're talking about levers for change, certainly we need good governments, we need the nonprofit sector, but we also need the investment sector. We need private capital to be on board with this change, and that our personal money is a huge lever towards creating the economy that we want. So, really, my perspective is that those of us who do have the privilege of being able to invest really ought to be intentional about how we invest that money. Now, I know the language around sustainable investing can be a little bit complicated, so I really appreciate these clarifications of what social finance is. In my world, when it comes to investing, I tend to sort of split it up between what I call doing less evil versus doing more good. The doing less evil side, I'm not going to talk too much about that today, but that's, really getting the nasty things out of your investment portfolio. So it's looking at things like divestment from fossil fuels or from weapons, really the companies that are part of the problem. Let's get those out of our portfolio. It also looks at things like ESG, environmental, social governance, and shareholder engagement. These are all tactics that we can use when it comes to sort of doing less evil. But really what we're focused on today is the doing more good part of your portfolio. And I'm kind of deliberate with my hand sort of, signals here, because really when it comes to managing your money and my work as a certified financial planner, really the approach that I suggest most people use is that most of your money should be in those sort of doing less evil, more traditional funds. But it's super important to carve out part of your money for these doing more good options. This to me is the part that's a lot more exciting. It's a lot more impactful. I certainly have, it's my biggest passion is for this notion of doing more good. And really, when it comes to the sustainable development goals, there are some mutual funds or exchange traded funds, these ETFs that do focus on the sustainable development goals. But I'll be honest, I've been kind of disappointed. Like when I look at the companies that are inside, there are a lot of pharmaceutical companies because they link to the health side, or you might get companies like General Mills, that does a lot of like sugar cereals, but they count towards the food sustainable development goals. So, really it is tricky when it comes to investments in the stock market that we're really only going to get Wall Street's or Bay Street's version of the sustainable development goals. Whereas I think for a lot of us, we want this like grassroots sort of crunchy granola impact in our local economies. And this is where impact investments really shine. So 10 Cardin is a great example of this, where, this is a co-working space in Guelph. How the heck does a nonprofit buy real estate in Guelph? Well, the answer is community bonds. That they issued a community bond that investors loaned the money that they were able to buy this building, do it, that they're now paying interest on those bonds. And it's undeniable that positive impact that 10 Cardin is having within their local community. There are other impact investments that are available. Something like Habitat for Humanity in the Kitchener-Waterloo region. I think a lot of us know Habitat for Humanity. We know that affordable housing is such an important issue right now and that they're part of the solution. But again, how does this nonprofit, how do they buy land? Right? Well, they need impact investors like us to step up and to loan them the money to be able to buy that land. Fair Finance Fund, another great example right now, very similar to what Harvest Impact is trying to do in terms of building a sustainable food ecosystem. So these are all options that are available right now. One of the issues with these impact investments is that oftentimes sort of the window opens, they become available, and then they sell out. Investors buy up the bonds and the window closes. So, it can be a little bit tricky keeping track of these things. I do have a list on my website. So I've got free resources on my website, and there's this list of impact investments. So the URL, it's like goodinvesting.com/impact-investments. And this is a list that I maintain of currently available impact investments here in Canada. So I think that's a really nice resource for people who are exploring these as well. Oftentimes they're not necessarily available in all regions. I see in the comments like Solar Shares, another great example, although I believe they're sold out. I don't think they have an offering right now. I did take them off my list because they sold out recently, which is great, but it means that they're not currently available. When it comes to these impact investments, these are not get rich quick schemes. You're looking to earn a nice, boring interest rate, usually about 2% to 5%, in addition to having this positive impact. So, these returns are about the same as a GIC, a guaranteed investment certificate, that you might buy at a bank or a credit union, right? You're earning about the same as you would with a GIC, but you're getting warm fuzzies that we're having this positive impact. Now, the trade-off is that we are taking more risk, that GICs, they're guaranteed, there's zero risk. Whereas when it comes to these impact investments, there are going to be risks associated with them. And it's really important that you look at them. I'm happy to get into that a little bit more in the Q&A. People want to know sort of how I evaluate an impact investment, the different risks that we look at. I'm happy to get into that. But really, my overarching message is that, each impact investment is unique. They're each going to come with their own risk and impact. And it's kind of important for us as investors to be able to evaluate that and decide what's right for us. Now, really, I think want to reiterate that this is not investment advice, right? That you really ought to speak to a professional, a planner, an advisor, and, figure out whether this makes sense for you. Really that when it comes to these impact investments, I don't want you to put all of your money into them. I want you to carve out maybe 5% to 10% of your investment portfolio for these impact investments. But if everyone invested 5% to 10% of their portfolio into impact investments, we'd see huge progress towards the sustainable development goals. You can see the organizations that are using social finance as a tool are having such a bigger impact that they're able to leverage this private money in a way to, in addition to grants, in addition to donations, this really is an additional funding stream for them that can just allow them to grow their impact in a really long-term sustainable way. So, what I'm hoping to do, and really what I advocate for, is for individuals to kind of take ownership of their investments, to actually look at what's inside, and to really consider carving out part of your portfolio for these impact investments, so that you can earn a financial return, but also really create that positive impact and help us together move towards those sustainable development goals. If anyone wants to talk about their investments on a more personal level, this is what I do. I'm what's called a fee-for-service financial planner. So I'm not a manager or a broker. I never touch my clients' money. I'm more like a coach or a consultant. And I do offer everyone a free consultation. So if you want to chat about this stuff, you can sign up for a free consultation at my website, goodinvesting.com. But really excited to jump into the Q&A. I'm sure there's some really, really cool questions and discussions that we can get into. Thank you so much.
Thanks, Tim, and thanks to the other speakers who shared with us today. That was a great sort of introduction to social finance, and I really appreciate you all weaving in the SDGs piece and recognizing the role of capital and private capital and money in helping us sort of move towards these big, ambitious goals that are articulated in SDGs. So there are a few questions that have been coming in that I've been trying to keep track of in the chat. So hopefully we can get to all of those. And if anyone has any other questions that come up as we go through the Q&A, please continue to send those in the comments and we'll hope to get to them. And I also just wanted to flag that the resources and links that Tim mentioned are in the comments as well. So the list of his investments and then a link to sign up for a free consultation is also there. And we've just put up information about the 10C community bonds as well. And we'll send out all of this information afterwards as well, but I just wanted to flag that that information has been shared. Okay, so one of the first questions I wanted to ask, and maybe this is more specifically for Verge Capital and for Harvest, there's just a question in the chat about the number of loan clients that you have and your total investments. If you can share that.
Yeah.
So Jess, Heather, Filsan, feel free to jump in.
Yeah.
Yeah, I'm happy to. I just dropped it. I have the number right in front of me. So we have 15 loans currently to 14 businesses. The total is in our lending is 215,000, and likely by March we have three toward the larger end of our lending, which is up to 50,000. 3 more loans in the works, and so. Considering how young we are, it's a lot of lending. Yeah.
Thanks. And Filsan, did you want to share?
Yeah, absolutely. Thank you. Great question. So we currently have 27 loans out. And since 2015, we've given 43 out. And that's a total of a little over 4 million. And that's all in Southwestern Ontario. So as of now, we are at capacity for our breakthrough fund. We do have a wait list for our startup fund. So we are in the process of creating a second breakthrough fund in partnership with SVX. And I'll be happy to put down our website in the comment there. So if anybody's interested in accessing loans for social enterprises, we are working on a list of, as we have the capital, as we deploy the capital for this year, later on in the year, probably around June, July, August, just in that area. So we'll be able to contribute more, and we're excited about that. Yeah, thank you.
Thanks for that. There's another question, and maybe Tim, this is more in your realm of expertise, but around the platforms available for impact investing. I think I lost track of the question.
Yeah, no, I saw the
Around-
question.
Yeah.
It's how to do it. And this has been a frustration for so long. So to be clear, these impact investments are what we consider private placements. So these are not publicly traded investments like a stock or an exchange traded fund, something that you can buy through one of these trading platforms. So what this means is that it's really challenging to hold them inside of a registered account, like an RSP or a TFSA. Legally, these things are, like, I think most of them have gone through the paperwork to be like, yes, we are eligible for an RSP, but the only group that I've seen really do it is, what is it, CWCF, Community Workers Co-op Federation of Canada, something like that. But that basically they've been around for over 100 years. They've kind of got some grandfather rules where they can hold these impact investments inside of an RSP or TFSA, but you have to pay an annual fee for those accounts. So unless you're investing, I don't know what the break even is. The last time I did the math, it was about $15,000 to $20,000 through one of these accounts. It really just doesn't make sense to hold it inside of a registered account. What I find is that the best way to do it is, the easiest way to do it is just to invest directly with the organization, which means that you're not using a platform, you're not using a Questrade or a Wealthsimple Trade or one of these, trading platforms to do it, which means that you're not holding it inside of a tax shelter like an RSP or a TFSA. So that means that you are paying taxes on the interest that you're receiving, which, for a lot of us, if we have room in our RSP and TFSA, it's kind of not necessarily optimal. But again, this is one of the reasons why I don't want you to put all of your money into these, that really you want to carve out part of it and really just dip your toe in the water. And then, for those people, like I have a lot of clients where they do have the privilege of having their tax shelters maxed out, where their RSP is full and their TFSA is full, and they have additional money on top of that. And if you're in that situation, like, high five, you're doing awesome. Like, you've got money, you're going to be okay in retirement. Congratulations, you get to pay taxes on your investments. So for those people, that's where, putting a much larger dollar amount into impact investments, I think, makes more sense. But for those of us with a lot of room in our registered accounts, really you might just want to do the minimum of $1,000 or $5,000 or whatever that minimum is. Just kind of dip your toe in the water just to, like, get started, and then have this as a goal for, as you get further along your investment journey. But it's been a real battle. I mean, we used to be able to hold these community bonds and green bonds, inside of a Questrade account. There was a time where we could. It was a magical time where they would process them for a very small fee, but I think the administrative burden was too much for them. And so a lot of these organizations either, charge us a lot of money to do it, or they just simply say, no, you can't do it. But that's definitely something that I'm working on, and it's going to be slow.
Thanks a lot for that insight, Tim. And that sort of got me thinking about another question, maybe more specifically for Virgin Harvest. For people who are in the position where they have that capital to make an investment in their community, I wondered if you could talk a little bit about the process for becoming an investor, and maybe a little bit also about for the folks who invest with Verge or with Harvest, how do they find out about the impact? Like, how do you share the impact back with your investors? What does that look like? So Jess, Heather, Filsan, I'd love to direct that to you.
Yeah, maybe I'll talk about the process, and then do you want to talk? Yeah. So again, it's really just as Tim was sharing, you're going to reach out to us directly. And, just to speak to the 10C bonds, we have over $2.5 million out in bonds. And And that is over 120 investors. So when we talk about, because there are other organizations, and no harm in it, it would be a lot easier if we were only managing 5 or 6 bond accounts where people were investing, like had a lot of philanthropy to offer. But we really, in the sense of a community bond, we are a community asset. Our bondholders are the second lender to this physical space that we're able to be in. And so I just wanted to touch on that as well. So, and it speaks a little bit to our process. So you would reach out to us. There would be a conversation offered. And then on the back end, we have really just a signed bond certificate that comes back to you. And then depending on what you want to do, some people are happy to have their money sit in a space, again, depending on, again, Tim, I appreciate, it's, we can say, your comfort level financially, but I think it's really great for us to have the perspective of your privilege financially, that you can be receiving your interest payments, or sometimes people want to put them back into the organization. And so there are lots of opportunities that way.
Yeah. So once you become a 10C bondholder, obviously you're subscribed to updates that we will be preparing to send out in our newsletter and specific bond communication. With a 10C bond, you get a complimentary 10C membership, so you can use the space. You can come in for tours and book any sort of events. For the Harvest Impact Bond that's coming in Q2, we're looking very closely at those 11 principles and practices that we talked about around food waste, around greenhouse gas. If there's particular areas of interest in terms of your investments, we will tailor those reports based on your interest level. And so we're working on that right now to be able to fine tune exactly the types of reports that we ask of our clients and what that comes back to us as. And then as we share that out to our future bondholders coming forward.
Thanks a lot. Filsan, do you have anything to add from Verge?
Yeah, thank you. Great question, Emily. That really just is speaking to a lot of what we're doing right now in starting this third fund of ours. So what, in terms of getting investors on board, really just there is a lot of interest, over the past few years in impact investing. And we're seeing that, particularly being located in Southwestern Ontario, it's definitely not as strange to hear as maybe 10 years ago. So, that starts off by, us connecting with, we have a lot of people contacting us who are interested and maybe have heard about Verge and what we've been doing over the past few years. And we also have, connections that we're making to maybe new people, new institutions who haven't been in impact investing, but are interested and are trying to take these steps towards. And what that onboarding process looks like is really just conversations about what we've done so far and we're wanting to do, deep dive about fund structure, and then we get into subscription, what that looks like, and then once the impact investors are on board and the fund has started, what regular reporting looks like is we send out every quarter a report of all the social enterprises in the fund, and we also add in the SDGs that each social enterprise contributes to. And that's really our way of updating the work that's being done, the positive impact that's being done in that sense. Thank you. Great question.
Thanks. And Tim, I don't know if you have a perspective from other impact investing funds, like what does that sort of reporting back process look like for investors?
Yeah, there are a lot of really cool stuff happening right now on the reporting framework. I think I saw a question in the chat about SROI, social return on investment, sort of as a concept, and that it's an evolving field. So what I would say is that I don't think we've nailed down the notion of an impact report and, streamlined across all organizations with consistent indicators and benchmarks. So we're still figuring that out a little bit. That said, there's some really cool work being done. I host a podcast with the Toronto Star called Responsible Investing for a Sustainable Economy. And the episode we have coming out on Friday is with a woman, Anshula Chowdhury, from Symmetrica. And Symmetrica is awesome. They do super cool impact reporting. I see people nodding their heads. So, we all think Anshula is amazing. And that we kind of get into it a little bit, this difference between outcomes versus impact and how to measure that. And it can get really technical. There's a lot of nerdy stuff that goes into it. SROI, according to Anshula, is still one of the most robust methodologies for it. And there is a bit of a strict methodology there. That said, what I find is a lot of the robust and, consistent reporting frameworks aren't great for storytelling. No. That I think, when I talk about the warm fuzzies that a lot of investors want to feel from this stuff, it's not something you can really, put on a chart or in an equation. That, so often what I do is I bring people to the physical location. So into 10C or into the Center for Social Innovation and, show them this is the home that Community Bonds built. And you can feel it when you're there. There's this really cool energy. A lot of the work that Verge is doing, I participated in an alternative microloan, Catapult microloan several years ago. That's how I went from, having a blog and I was teaching at Sheridan College to launching Good Investing. I had to pay for the branding and the website and it's not cheap. It's not easy to do that. And so I got a microloan to do that. And the impact that I felt was incredible. Now, how do I measure that? How do I count? It's going to be really challenging and it's really going to vary organization to organization. So, what I look for, and I think what my clients are looking for, is a little bit of a combination. It's nice to get an impact report that does lay out sort of the math and the metrics and, in a strict sense, but more than anything, we want the stories. Filsan, if you're doing quarterly updates on the enterprises that you're supporting, Jess and Heather with Harvest, if you can give me an update on the farm and how are the cows doing and the baby calf that's growing, and I want to watch them grow, and see that impact that it is often more of an emotional thing than what I think a lot of these sort of hard and fact impact, numbers-based metrics will tell us. So, it's definitely a bit of an art. It's a bit of a science. It's still evolving, but the biggest thing to me is just communication with investors that, you want to keep them updated on everything. And really, I love the idea of asking the investors, what do you care about? What are the issues that matter most to you? And then, okay, great. We're going to share the data and tell the stories that matter to you.
Yeah. I just want to add, I love everything you're saying, Tim, and just to add on to it, the importance of in the storytelling because we love the warm, fuzzy stories, but we also love the stories that are aligned with evidence-based need. And so for us to be able to say how this impact, what is the ripple and multiplier effect of this? I've been around 10C for a while, and in the beginning, when we were going through this building development, and I was taking bond investors through in tours, I would say, tell me what you care about, because I can find an entry point for how we're impacting it through 10C, whether it's through our programs ourselves or through the membership that we're then supporting. And so it's great to be able, for sure, as well, I love that you're bringing people actually into the physical space where we can have that conversation. We can have that one-on-one conversation. I just want to follow up and maybe Spirit Mail. There was a question that you asked, can businesses invest their capital? Absolutely. Yep. The short answer is yes. I don't know if there's a follow-up or if there was something else that you were asking in there, but the short answer is yes.
I can speak. I'm guessing it just has to do with investing as a corporation. That, you know, if you are incorporated and you've got a corporation, corporations are allowed to invest.
Yeah.
The paperwork, you know, it's like obviously you're doing everything as the corporation instead of the individual, but it's actually a nice thing from a tax perspective if you are incorporated, because business taxes tend to be lower than personal taxes. So I've definitely helped a number of business owners, a lot of doctors who are incorporated. You know, often they're earning really good money. Their accountant tells them to keep the money in the corporation and sort of pay themselves a dividend over time. So this can be a great way to keep money in your corporation, earn a financial return, pay those lower corporate taxes.
Awesome. Thanks for that insight. There's a question that maybe builds a little bit on the storytelling and investors learning more about the businesses that they're supporting through the social investing. And there was a question in the chat around something you maybe mentioned, Filsan, the additional business support that comes along with the financial investment through Verge. And the question was around where does the business advice come from, or who does that advising? And similar question for Harvest. You mentioned that too, the additional business support, what does that look like? How important is that to your loan clients?
Yeah, maybe I'll just start off. And that's a really great question, because that's, you know, being in this field, that's one of the things that we always want to be thinking about is how can we also ensure that the social entrepreneurs are successful, and what supports can we continue to offer. So one of the things we do at Verge, our support services really go throughout the entire application period, and even after, when those applicants are now investees, and we use the term investees. So what that even looks like is we have a review panel, and so these are volunteers who are really, you know, across the region, come from different backgrounds of expertise in business. So they're able to offer support. So whether it's you know, financial projections, whether it's, and we've had a lot of, obviously in the climate that we're in, which has been very difficult for a lot of social enterprises. So those are the supports that we can continue to offer them. And it's really, you know, when you think about traditional financial institutions where somebody wants to start a business, you get the loan and it's goodbye, right? So there's really nothing, you know, especially coming from a place of social entrepreneurs who maybe don't have that foundational financial background. So this is, you know, where we can step in and say, hey, we have this service, we have this support, this group of people who can always, you know, you can access that support. So I hope that answers that question.
Yeah, thanks so much, Filsan.
I'll jump in as well. So as we've shared, we are quite young in what we're doing. Jess and I essentially make up the enterprise support office. And so again, even as soon as an application is made, if it's not completed, we reach out. What was the barrier to finishing your application? Especially if it is character-based lending, if maybe you have a bankruptcy on your record, or that for whatever reason it might be, we want to have that conversation with you, because often it's an assumption. Or just a fear or a concern. So we have a lot of Zoom conversations, one-on-one conversations, supporting people 100% through their application process. And then, you know, through Harvest Impact, we also have partners. We're partnering with COIL, which is the Circular Opportunity Innovation Launchpad. And through one of our programs that we're starting very shortly, it's called COIL Step by Harvest. We are building a bank of business advisors that will be available, and it is not just going to be limited to this program. We're also hiring a circular entrepreneur in residence. Those interviews are happening at the end of this week, which is really exciting. So someone that can have that really like sort of holistic bird's eye view of everything that you might need, and then directing you to the appropriate advisors. And so some of the advisors are, the opportunities are strategy and business planning, marketing and communications, business model development, finance and budgeting, networking, supply chain, product design, circular innovation, regenerative farming, skills and relationship coaching, product and shelf placement, funding application development, impact measurement, and your SDG alignment, and then any sort of legal and intellectual property. So we have a bank of folks that are here to support all of our investees or lendees. Yeah.
That's great. Thanks for that additional information. And there was a question in the chat around who can apply for funding for Harvest and Verge. So what are the criteria, or where can someone learn more about who can apply?
Yeah, so for Harvest, we're specifically looking for nonprofits, for-profits, cooperatives, really any type of business, social purpose, social enterprise within food, environment, and the agriculture sectors. Usually for us, we focus within Southern Ontario, so Windsor to Ottawa, and then north up into like Owen Sound. Those are our main areas of focus right now. And like we said, there's a get to know you that we usually go through first, and those like criteria or eligibility questions are within that first part of our Harvest Impact Loan application. Mm-hmm. Those are the same similar criteria to COIL STEP. Like Heather just mentioned, this program is currently running right now, and then also some of the other COIL programs that come out. Yeah. So if you, and really I should say too, an idea at any stage. So even if it's sort of like a seed, not really fully developed, we'll help you sort of get to that process where you can maybe go to launch.
And similarly for Verge, so what we have is, our intake at our website is where we get our first point of contact from investees. Our mandate is really just, we're looking for two things. Is this a social enterprise? Is it located in Southwestern Ontario? And really for the social enterprise, we're looking that there's a clear, the social enterprise element is not something added on. It's really central to the focus of the enterprise. And also, early stage, maybe 3, 4, 5 years, we're open to that since we have the startup fund and the breakthrough fund. So we really don't leave it to the applicants to kind of figure out, hey, am I at this fund or that fund? That's really up to us. So our intake form on our website just really has some detailed questions that, we first receive and we look at. And from then on, we just have a Zoom call, a chat, and just kind of find out more about the social enterprise and the social entrepreneurs. And because Verge is a program of Pillar Nonprofit, and Pillar Nonprofit also has an impact consulting team. So if maybe sometimes the investees are looking for some consulting, maybe they want to apply but they're not there yet. So we never really say no. But we say, okay, let's see where we can help you, how we can help you get to that point where you can apply, and that's really where we differentiate from traditional financial institutions. We really try to remove the barriers. So maybe there's an opportunity that Impact Consulting at Pillar Nonprofit can help that investee and have them at a better position. And then when they are, and we've had that often for a lot of investees, and then then they can move on and apply to one of our funds.
Very cool.
Thanks a lot, Filsan. And yeah, it's great to know that there's kind of an entry point, whether you have an idea or you have a more established business, and there's an opportunity for support and funding and all the things that go along with making your business a success. So thanks for sharing that. And we're almost at our time for today, and I wanted to see if each of our presenters had sort of one last final thought they wanted to leave us with before we sign off. And maybe I'll start with you, Tim. One final thought about today and for the audience.
I really think it just comes down to, what is the world that you want to retire into? That so often when it comes to our investments and thinking about our personal investments, these are long-term decisions that we're making. And I think that just in the same way that people are intentional about, the governments that they're voting for and the products that they're buying, and the shops that they're supporting, that really please consider, that same intentionality with your investments, that think about the world you want to retire into or the economy that you want your kid to graduate into. As you're pursuing those savings goals, know that you absolutely can align your portfolio with your goals and values.
Thanks so much, Tim. And Jess and Heather, final thought?
I can go first. Sure.
So I think as consumers, we have a lot of ability to influence businesses and what we purchase. And I think there's a lot of incredibly talented people doing wonderful, sustainable, really good, kind work. And by supporting their products, whether it be purchasing at a farmer's market or through a social enterprise that you can see the good work that they're doing, do that. Support them, especially now, and tell other people about the great work that they're doing.
Yeah, I want to touch on that around like the context of good, kind work. We are here in this room speaking the language of social enterprise, social impact financing, and we have the great experience of having a commercial kitchen here on site. And I've brought people into the program that didn't know that they were a social company. So I really just to encourage, like if there is anyone at your farmer's market or in your network that might not know they have access to this, to support that. A great example is someone that makes bone broth hot chocolate. And they actually, like the work that they're doing, she didn't know what circular economy meant. Being able to educate around that not only made her realize that she had access to our particular brand of financing, but it has also inspired her to now look at all of the other ways that she can be circular in what she's doing. And so all of this is going to happen in dialogue as we are talking to others and spreading the word. So just to encourage all of that as well. Thanks.
Thanks so much. And Filsan will give you the last word here.
Yeah, thank you, Tim, Jess, and Heather. I mean, just amazing comments. But just to really just add on to what you both said, it's an exciting time for social finance, especially in Canada. We're seeing a lot of, we're seeing a lot of community building. We're seeing a lot of even support from the government and realizing that social finance is a instrument that we can use to achieve positive outcomes. So really, one last thing for us as members of this community is really just to continue to reach out. And just like, Jess said, there are a lot of people out there who, these are inherent to values to who they are and how they do business, but not knowing that there's a community out there that, they can access supports, right? So us to, continue doing that outreach. And also, I mean, just for us to just have conversations like this, right? Points of exchange for ourselves, like knowledge sharing, and also just helping others, answer questions. And maybe people are still wondering, what is this social finance, right? Just being able to bridge those gaps, really. Thank you.
Thank you. And thanks again to Filsan, Tim, Jess, and Heather for sharing today. And thanks for everyone watching. And we'll be sure to follow up with all the resources and links that were mentioned today. But thanks so much and have a great afternoon.
Thanks for hosting. It's great.
Bye, everyone.
Bye.
Bye, everyone.